Good day, Mike, and all those at Amazing Connection. Today, myself and the team at TAXCELLENT will be explaining the deductibility of expenses incurred by Amazing Connection with regard to the proposed solar system. We will be using the Section 12BA of the Income Tax Act instead of 12B due to the implementation of the system taking place between the 1st of March 2023 and the 1st of March 2025, and we will be electing the enhanced deduction as it is the better choice because of the time value of money. According to the financial statements of Amazing Connection, they will be a compulsory VAT vendor as their revenues in the past 12 months exceed 1 million rand. Due to the nature of Amazing Connection's trade, being a zero-rated commodity, they will be able to claim VAT inputs on purchases. We will assume that amounts provided are VAT exclusive amounts due to the nature of the amounts in the financial statements. When it comes to the purchase of the panels, the amount spent on the solar panels will be deductible according to Section 12BA of the Income Tax Act, as the panels were purchased on the 1st of June 2024, were delivered on the 1st of July 2024, and were brought into use during the 2024 year of assessment. These dates fall between the 1st of March 2023 and the 1st of March 2025, and the panels will be used in the generation of renewable energy. This means the purchase price of 120 million rand will be allowed a deduction of 125% in the year it was brought into use, which amounts to a deduction of 150 million rand in the 2024 year of assessment. With regard to the installation costs of the panels, the cost will be allowed the same Section 12BA deduction as the purchase price of the panels themselves. This is because installation costs are specifically listed as a cost allowed the deduction in Section 12BA subsection 3. The cost of 175 million rand will be allowed the 125% deduction when the panels are brought into use. This means the deduction will amount to 93,750,000 rand.
The purchase of the BOS, which consists of inverters, electrical components, as well as mounting structures, they are considered as one of the assets that generates electricity for the company. The estimated cost of 10 million will qualify for Section 12BA of the income tax deduction instead of Section 12B due to a new expanded incentive, as one of my colleagues has said. Therefore, the 10 million will qualify for 125% deduction, which is going to equate to 12,500,000 for the company. When it comes to VAT implications, the company is allowed to claim VAT input of the cost, which is going to be 10 million of the BOS. Therefore, the amount is going to be 13,004,348. When it comes to obtaining a permit, it is not allowed a deduction. Therefore, Amazing Connection will not be allowed a deduction of 750,000 of the permit.
The payment of maintenance costs is to ensure that the solar panels perform effectively for an extended period of time. If all the requirements are met of the Section 11A deduction formula, the maintenance costs will be deductible. The organisation is carrying on a trade as there is continuity in their operations, as they have been operating since the early 2000s. The maintenance costs will be voluntarily incurred and therefore considered as expenditure. The annual maintenance costs and major service will be actually incurred, as they will be paid in cash when the amounts become due. Due to the major service maintenance cost of 500,000 being due in 10 years, it will not occur in the current year of assessment. The expenditure is closely connected to the income earning activity, because without the maintenance of these solar panels, they will not work effectively. The maintenance costs of 10,000 do not create an enduring benefit and is therefore not capital in nature. The maintenance cost is laid out for the purposes of trade, because without the solar panels being maintained, operations will be affected. Therefore, the 10,000 of maintenance expenditure will not be a prohibited deduction under Section 23G. The maintenance cost of 10,000 will meet all the requirements of the Section 11A general deduction formula. The major service cost will not be deductible in the current year of assessment. The inspection costs and feasibility analysis are considered as a direct cost that is incurred for the solar panels to be working at its full capacity. The inspection will be done on the foundation or supporting structure of the solar panels where they will be installed. According to Section 12BA2, in the 2024 year of assessment, the inspection cost will be deducted at 125% of the costs incurred. The amount that will be deducted will be 1,875,000 in the current year of assessment. The insurance costs may be deducted under Section 11A if all the requirements are met. Amazing Connection is carrying on a trade as there is a profit motive and there is continuity in the trade activities. The insurance cost qualifies as expenditure as it will be voluntarily incurred. The insurance cost will be actually incurred as it will be paid in cash. The insurance expenditure will be incurred on an annual basis with 6 months in the 2024 year of assessment and 6 months in the 2025 year of assessment. The current portion of $100,000 will be incurred in the current year of assessment, and the deductibility of the remaining $100,000 will be determined using the provisions of Section 23H. Application of Section 23H revealed the following. The insurance service benefits will be derived within 6 months after year end, and the prepaid portion is equal to the R100,000 threshold. Therefore, the portion relating to the current and prepaid costs will be deductible if the following requirements are further met. Due to the nature of Amazing Connections business, such expenditure for insurance can be considered as being closely linked. The insurance expenditure does not create an enduring benefit and is thus not capital in nature. The expenditure is in connection with the taxpayer's trade and was laid out for the purpose of Amazing Connections trade and is not prohibited by Section 23G. Therefore, the insurance expenditure will comply with the requirements of Section 11A for the 2024 year of assessment. The battery power backup will protect the operations from power cuts caused by the solar panels not generating enough power. A battery power backup is not deductible under Section 12BA, as such storage assets contradict the objective of Section 12BA incentive, which is simply to add more energy to the grid. However, SARS has provided a Section 11E allowance with a write-off period of 5 years. Therefore, $1,290,000 may be deducted in the current year and in each of the remaining 4 years of assessment and is not apportioned for the year. By implementing available tax credits and deductions, Amazing Connection can maximize returns while contributing to sustainable energy solutions. This brief video is subject to the disclaimer in the written tax opinion.